This is Rod Kusin and Spooman for Risk for Tuesday, November 16th, 2010. All times on the chart are Central Standard Time. A couple of brief things before we get started. Our retracements today were 85% accurate. We had a lot of retracements that were left above the market as the market shorted. We can expect that these are in all probability going to be filled tomorrow on the rally up. Also, in brief, all of our strategy trades using the divergence setting hit their profit targets, so that was good. And yesterday's video, at the conclusion, we called a short for Tuesday morning, and we showed you why we believed it was going to short. That proved to be accurate. So what we wound up with is a red day down that resulted in the lows of the day just prior to the last half hour. A little bit odd, but it could be that we may see new lows hitting after the market reopens this afternoon. Now, that having been said, let's take a look at the divergence strategy. Now, the divergence strategy somewhat surprisingly did really quite well in a trending market. So let's take a look at we'll take a look at all of the trades that we pulled. Nothing happened in this strategy until mid-morning. And there we have our first long trade. Now we have multiple strategies running in this workspace. All in all, we have 6. Now they're actually there's really only 3 sets of strategies here. The difference being we have a volume filter on each version of the settings. 3 different primary settings and then an alternate with a volume setting. So when we look at these trades, you're going to notice that there are slightly different colors to these trades, and that's because they're representing slightly different strategies. So the first strategy that placed these 2 somewhat lime-colored arrows was the strategy that has these divergence settings. We're using an OBOS of 30 and 70 and the 3 and 10 tick large contract further filtered by a 500 tick ES stochastic, and of course using our premium reader. So that pulls the first set of trades. Then a little later on we get another set of trades. A little early on this particular trade here, bit of a drawdown. We have our signals here, our warning signals that showed up. Then we get a battery of different long signals at the bottom here that also hit their profit targets. And I won't go into all the differences in the settings here. Now a little later on, let's see here, right in here, we get our first set of short trades. They too hit their profit target. And then we get a nice picture-perfect divergence trade here at the bottom of that move at roughly 1340. And then, without checking to be absolutely sure, it looks to me like all of our strategies fired off long signals at the low of the day. That's pretty interesting. That's really pretty interesting. Yeah, 1, 2, 3, 4, 5, 6. We've got 6 different signals here representing all 6 different strategy settings, all hitting exactly at the low of the day. Woo! Can't get much better than that. All right. Oh, and then we had finally we had some short trades as it rallied up right before the close, and those strategies also hit their profit targets. Now, now as we did yesterday, I'm going to do today what will be the call for tomorrow morning. I don't have a fair value calculation as of yet, but I kind of doubt that fair value is going to move too much. I could be wrong, but if it doesn't move too much, then the call for Wednesday morning will be long. And that's kind of not too difficult to presume, given the fact that there was such a sell-off today. Oftentimes the following day, there's going to be some sort of a rebound or retracement, so that's almost logical. But the calculated bias appears to be long. I won't really know that until I have a fair value calculation, which at the moment doesn't exist. So that's what we're looking for tomorrow. Now I want to take the remaining time on this video to address an issue. How does the strategy handle protective stops? All right, we have issues here. We have a very simple setting for protective stops. All right, right here, you place whatever that stop needs to be, and once the trade is executed, a stop loss will also be executed. Now, there's a problem with that, however, and we have elected not to become too sophisticated in the use of our stops because there is a problem in the way in which TradeStation handles limit orders. Stop orders, limit orders, doesn't make any difference. TradeStation has a problem. Number one, TradeStation only allows one stop or one limit order per trade. So let me put this in context. We have the ability to have a protective stop, or we can put in a profit target, or we can put in a break-even stop. But only one of those can exist at a time. TradeStation's limitations currently make it impossible to have both a profit target and a protective stop in at the same time. An OCO type of stop arrangement does not exist. They can't do it. Now in the Trade Manager, you can set that up, or pardon me, in the Matrix. But strategies don't have that ability. So it limits how we handle the stops, and consequently, we've decided not to become too sophisticated with our stops because of inherent limitations. Now, furthermore, there's a secondary issue here. Let's just say that a profit target was active, and then all of a sudden you lost power or you lost a data connection. Your profit target is valid. It's in the system. But if you lose connection or lose power and then the market turns on you, there's no way to issue a protective stop. It doesn't exist because it's already been canceled by the profit target. And consequently, that could be a real danger for our traders. So we recommend to our traders at the moment that they'd be better off handling their stops manually. And in fact, ultimately, the best way to handle stops is to put a stop order in before you even execute your trade. First of all, you ought to know what direction you're going to be trading in. So you enter a stop, and then you move it once your trade takes place. That is the best way to make sure you never run into trouble. TradeStation is coming out, in fact they have come out, with version 9. Now version 9 looks identical to 8.8. You will not see anything really different about version 9 versus the 8.8 build. But behind the scenes, they're quite different. There's a very advanced, easy language code in version 9 that is going to now make it possible for us to get far more sophisticated in the use of our stops. So we're going to be working on that in the days ahead. And we'll probably make some adjustments to our strategy to take advantage of things that could not be coded under previous versions. And in so doing, we're going to correct the issue relative to the problem of stops. So we can look forward to that. Now, before we conclude, here's what we see in the strategy performance report, and another good day. Okay, I think I've covered everything I wanted to cover. So we once again implore you, please give us a call. Contact us. We'd be happy to perform a live demo for you, answer any questions you have. And go and visit our website. We're going to be posting more information about the system on the website in the days ahead. And feel free to send us an email, comment on our videos, and contact us with any questions that you might have. So we look forward to hearing from you. And this is Rod Kusin and Spoonman for Risk.